Hello smart investors, today we will speak about ghosts in investing. Do you buy single stocks? Don't do it! Who is sitting behind your monitor when you're choosing stocks for your portfolio? Don't you see anyone? Wrong. Come on, we have an S&P 500 index fund here that gives us around 7% of annualized returns. And a lot of good index funds here that give us about 10% per year. But guess what? This is not enough for most investors. It's like we have a speed limit of 60 miles per hour on the road, but this is still not enough. So are you running 90, 120, 150 miles per hour? Despite the actual speed, you can always go faster. But is it worth doing on the road? Is it worth doing in the market? We all know how this is finishing, but why do they think that we can make an additional 2, 3, 10% the stock market and we buy single stocks like crazy trying to beat the index and outsmart others? Why are they risking so much for an additional 3% per year? Spend a lot of time on this. We have a habit that markets are always going up and up in the historical period, but half of the stocks show returns less than bonds if we will take a look at Hendrik Binder research. This research was made based on the USA stock market. Other markets are just even worse, by the way. Hendrik has researched more than 61,000 stocks from 1990 to 2018 and discovered that most of the American stocks do not even beat the bonds. I need to mention that the taken period is a period of QE and low rates. To simplify, I will say that only 20% of stocks make 80% profits within S&P 500 index. Hello to Pareto rule. More than half of the stocks showed negative returns during their lifetime. Only 4% of all stocks make the entire capitalization growth of the stock market from 1926 to 2016! Exclamation mark. For example, Big Five, Apple, Microsoft, Amazon, Alphabet, Google, ExxonMobil is responsible for a growth of 8% of all world stock indexes and 44 trillion for the last 29 years. These are only raw numbers. We need to cook them somehow. What does it mean? That means that a retail investor is dramatically brave if he tries to go with his own portfolio of stocks. Because in order to beat the index, you should concentrate your portfolio choosing 5-10 best stocks, the champions from other 500 stocks. Choosing one stocks, choosing few. Because if you load your portfolio with 30 stocks, they will just show an index performance or close to it. That does not make sense in order to beat the index. It is easier to buy an index fund and finish this choosing process. Therefore, you will free your time for important things like to like somebody. There is something inside us, some inner voice, I hope only I can hear him. So this voice says to us, they can't beat an index, but you can. You can see that nobody can see. You're another, you're the chosen one. That's how I can imagine a devil's voice. It should be even much sweeter. I discussed that with my friend and for sure I'm always irresistible in arguing with friends. Unbeatable. Here's the main point. We all see businesses around us. All type of them. Food, banks, semiconductors, shops, planes, marketplaces, space conquering, peach fairs, plums, oranges. So the owners of those businesses and top management, all of them do their best to earn money. They work 12 hours per day to squeeze every possible dollar, as fast as they can. Many of them have survived in a period of 100 years. They crushed a lot of competitors and, do you know what? This best one is still working for 3, 5, maximum 10% of profitability per year. Exclamation mark here again, the second in this video. Wow! So they put $100 million into their businesses and extract only 5 million after 1 year of hard work. They risk everything sometimes, they fight with competitors, losing their peaceful sleep and so on. And now please imagine a stock market. You can sit in the front of your computer and earn 20% per year with easy, and everyone will allow you to get this free and easy money? Do you really think so? What do I want to say? The companies can get their cash and just put it into stock market, guided by the best minds, and earn 20% per year without working hard at all risking the businesses? It will be 15% more than they will earn from their businesses. I mean, if you can get a stable additional 3-5% up on the S&P 500 index, you can easily attract very big money in your fund. You can sell your business and run this money into the S&P. So you will sit in front of the computer and research stocks, develop some algorithms as shown in movies and strategies, and earn a lot of money. It's much easier than creating your own business. So a crazy amount of people want to sit in front of their computer and earn millions and billions. And you should be smarter than 99.9% of them. Better than all these big heads from the best universities in the world. Why? Here we come closer to a very dangerous illusion. When you choose single stocks for your portfolio, it may seem that you are fighting with numbers and ratios only. When you will clarify all of these numbers, you will win. No. Sorry, but you just don't see others. The smartest guys, from Cambridge, Oxford, professors, Nobel laureates, and all kinds of robots, artificial intelligence, hedge funds, and even the genius housekeeper from Oklahoma. And oh sorry, we forget about the few millions of the Chinese guys who were brought up strictly from 4 years old in mathematical school. The guy who always wins in all types of games and knows every discipline and so on. All of them are ghosts behind your monitor. They exist and already bought the best stocks and speed up the prices to the optimal levels. It's too late to buy them. Sorry, they took all the alpha from us. We have to have our own investing weapon. So after all, you can hope for an index profitability, maybe. It will be a big luck now, and I have not to mention emotional qualities and behavior here. You might be saying now, but I have already beat the index, who is this guy? He's wrong. Yes, maybe, but how do you distinguish your results from luck? Is it really your victory or just luck? Many times we are just right and victorious for the wrong reasons. The time will justify. You need to beat the index at least for 3 years to say what you can do it constantly and have developed a good system. And statistics for single stock pickers is not on their side. Sad. So here is only one stock from 5 stocks that will bring you more profits than index strategies in the long term. So, I don't think you will bet your money on the 1 to 5 chances in real life. It is worse than a casino if you are going without wide and professional diversification. The average investor cannot beat the index, so if you put your money to an index fund, you will beat the average investor. Paradox. It's like you need to be an average to beat the average. What? Sounds strange as all my English and accent, and if you have watched until this moment, you will reach success in investment also for sure. When you will try to pick a single stock in your portfolio next time, just remember that you are not alone. You are with the ghosts. Investing ghosts behind your monitor. There. Do you still buy single stocks? Don't do it. Invest in a like button now, please. Seriously guys, I very appreciate your attention and will make the next videos better and more informative. Please stay subscribed and invested in assets. Thank you and see you in the next videos. Goodbye.